Tax season. It's time to file your personal taxes. Are you expecting a refund this year? Or maybe you think that you might have a balance owing. Likely, if you're asking these questions, then you aren't involved enough with your year-long tax planning. Let's fight through the weeds and see if we can make sense of this.
Welcome to the Money Nest, your source to not becoming a financial liability. You will learn how to become fiscally responsible, save money, and grow that nest egg of yours. The Money Nest is proudly sponsored by A1 Bookkeeping Services, serving small to medium-sized businesses with bookkeeping and providing tax services to people just like you. You can find out more info about them at a-1bookkeeping.com. Now, here are your hosts, Suzanne and Mark McKinney.
Welcome, everyone. I'm Mark, and I'm so excited to welcome you here to this episode of The Money Nest.
And I'm Suzanne. Thanks so much for joining us today.
Hey guys, I'm Tammy. I'm joining in today also. Glad to be here.
Before we get into this episode, we want to take a moment and remind you to please like, share, and subscribe to The Money Nest. This allows us to have the widest distribution possible, and it helps us to share the content of this podcast, and it also gives us encouragement to upload more episodes. Your help in getting the word out is appreciated. Once again, please don't forget to like, share, and subscribe to The Money Nest. Tax season doesn't have to be a bad word, and believe it or not, it shouldn't be a celebration time either. Both scenarios will need to be discussed, and we're going to do that. The most important factor to consider before we get into anything is that tax season, in our opinion, is an all-year-long process, not a one-day, once-a-year process, meaning that you should be planning for next year's tax season towards the end of the calendar year for next year. For example, the tax return that you would file in 2022 is for the year 2021. This tax planning should start in December of 2020. Now, if you didn't follow that, just rewind us and listen to it again.
That's correct. Your ducks should be in a row at the end of one year, so you can get the entire year under your belt with the fine-tuning that you need to do, so that every day from January to December is a complete year after you make your adjustments. This way, when you do your taxes the following year, it will give you a full and complete picture of your efforts, not just a partial year, because you did your taxes in April and already 1/3 of the year is over, and by the time you get around to making your changes, those alterations have already been implemented. You can easily lose half of the year.
Hold the boat. Don't forget, we could easily have listeners from around the world. We need to add a little disclaimer here. Everything that we have said previously is accurate for Canada, where we are based, and will also largely impact the United States. You may have to mold some of the details that we talk about for your country or region. Also, this podcast is created in 2020, so some of the fine details may alter slightly from year to year, and it may depend on when you are listening to this episode. So just a word of caution. Tax laws change, and what is applicable today may not be tomorrow.
Not only that, but at the time of recording this episode, we're also in the midst of the COVID-19 pandemic. So yes, there will be special mentions of economic relief in this episode that at this point will only apply to 2020. If any benefits extend into 2021, then more fine-tuning to what is said here will need to be considered. Finally, the details in this episode only apply to personal income tax, not to corporations, trusts, charitable organizations, and they may not even be fully appropriate to someone who has a business or as a sole proprietorship.
Okay, we got all the disclaimers out of the way. Let's talk about the ins and outs of tax season, how to prepare, and how it impacts us by making the wrong moves. Let's start with some general questions and satisfy some myths that people have, and as tax preparers, face daily. Tammy and I will ask Suzanne a series of questions, and she will fire the answers out. Suzanne's responses will be fairly short. Otherwise, we'll need to turn this episode into a mini-series.
I would agree.
Some of Suzanne's answers may not be complete, as they are more intended to head you in the right direction to find out more.
Okay, here we go. First question. Students don't pay income tax. Truth or myth?
Actually, Tammy, that is a total myth. Quick answer, there are no tax laws saying that students do not have to pay income tax. Often what happens, and the source of this misunderstanding, is that students traditionally make less than their basic exemption, and any money that they've earned under that exemption, they don't pay tax on. So if taxes are collected by an employer, then usually it's all refunded. Because they get their money back, people tend to think and believe that students don't pay taxes.
My turn. Talking about students and focusing on post-secondary education, can you claim expenses for, say, school, clothing, food, travel, books, or other expenses?
No, the student is going to need a T2202A. That's otherwise known as a T2202A or a tuition and education tax credit certificate. They're going to need to get that from the school, and on it, it's going to specify the tuition paid and the duration that they were in school. It'll say whether they're full-time or part-time. No other slips or receipts are required. The time on that slip that shows that they were in school will give them a credit that helps with their educational expenses. Make sure that you get the T2202A from the school before you try to get your taxes done. It will definitely speed up the process, and it often can be downloaded from the school's website using your login credentials.
It's always interesting how we get the same question each year. The question is, what do I need to bring in to have my taxes done? This is even asked from people who are in their 30s, 40s, and 50s, and have had their taxes done for decades in many cases.
This is a big question because everyone's tax situation is different. But I can give you a general sense. Some of these will be applicable in your case and others won't be. We need T4 style slips from all employers. This could be things like T4s, T4As, or any other slips that have the form number starting with the T. All RRSP slips, in most cases, there are at least 2 of them for the tax year. We will discuss RRSP slips further in the podcast. You're also going to have to make sure you have your T2202A. Again, that's the post-secondary tuition slip. Save your medical receipts throughout the year, or if you want to make it even easier, go to your pharmacy and ask them for an individual prescription report. Also, the amount that you may have paid into a medical plan for the year, that's claimable. Don't forget your donation slips. If you're in receipt of Canada Pension Plan, well, that's going to be a salmon-colored slip. And if you receive Old Age Security, that is a yellow piece of paper. You need to bring those as well. We already talked about T4 style slips, but if you've been receiving employment insurance throughout the year at any point, you'll need to make sure you either download or obtain a copy of your T4E if that applies to you. If you're self-employed, have rental income, or have expenses through your employer, we will need to see the totals of all of the various categories that you're wishing to claim. An explanation with more details on this subject would have to be a separate episode or a conversation, as there's way too much to cover here. You'll need to make sure you have any slips for monies that were received from either compensation or for social assistance benefits. There are most certainly many other slips or documents to provide, but again, that would just be too many to review at this point. All the information that I just mentioned will take care of the majority of clients' needs.
Next question. How early should I bring in my tax slips to have my personal tax return prepared?
Bring it in early during the tax season, but obviously not too early. For example, we can keep our prices lower than all of the other firms because we have the support of our clients to get what we need when we need it. With that said, don't wait until we get too close to the tax filing deadline to begin your process, even if you're not in a hurry, because once the returns hit our office, we process them as they come in. We put no priority on returns, so it is first come, first serve. And if you wait till the last minute, that doesn't leave any turnaround time in case we do have questions. Now, on the opposite spectrum, don't start the process too early by bringing your slips in when you don't have them all yet. Once you're ready, say in early March or even after that, then we should be all good to go.
People who have medical disabilities are sometimes paying tax preparers a percentage of the refund to get them to assist with their disability tax credit. Is this normal, or is there another way?
This is something that has been a thorn in my side for years. I won't judge other firms' practices, and it's fair to charge a fee for providing a service. But I think that folks with disabilities need their money, and a preparer should only get paid a fair wage for the service as provided. So if you're paying hundreds of dollars for this service, I would suggest that you shop around.
What should you include to be able to claim your RRSPs?
In this situation, don't be in such a rush. Here is how RRSPs work. RRSPs are claimed from March to December of the tax year and then the first 60 days of the new calendar year. All of those go on the same tax return. You'll get a tax slip from March to December in late January for your contributions from the previous year, but keep in mind, you will not get the first 60 days of the new year until that first 60 days has passed, so roughly around mid-March or so. At the end of the day, you should wait until you get both RRSP slips. Do not rush and bring in your tax slips until you've received both of them.
Should a married couple have their tax returns processed at the same time?
Absolutely yes. It's very beneficial for a host of reasons because you can bounce credits back and forth to see how it's going to benefit the couple the most. You can also transfer credits like tuition, donations, medical, and pension splitting, just to name a few. Also, they both need to be done in order to get the child tax benefit and quarterly GST credits as well if they apply. At the end of the day, yes, have them both done at the same time where possible. Don't forget, common law couples are treated the same way as married folk in the eyes of the tax collector. So there's absolutely no exceptions for those who are living together and are not married.
Okay, I'm in a hurry to get my tax refund faster. Is there a way that I can make this happen?
Yes, you can sell your tax refund to a tax preparer who offers that service. It's called discounting of returns. Most tax firms have their own name for the service. For example, at our firm, we call it Rapid Refund. The way that it works is that it's a government-legislated fee structure. It's going to cost you 15% for the first $300 of the tax refund. Anything that's above the $300 is going to be at a fee of 5%, and there's going to be a maximum amount for sales tax. If you think that it may cost a lot, consider the fact that you're getting your tax refund right away. There's no waiting, and that the tax preparer is taking the financial risk on the return, and it includes your tax return preparation. So really, what you're paying is a fee to take your return right out the door. In some cases, it costs just about the same to get your refund right away as opposed to waiting for it. It's an option. If you want or need your refund now and not wait, the option is there. Just don't get pressured into having your return discounted by some sort of sales pitch. That usually means that something's up in our opinion.
If I were to call around to get an estimate in getting my tax return done, what if I can't get a price over the phone? Is this normal?
You can call and get an estimate on a new car, or the price of a new toaster, or even buying a new house. So why is it so tough to get a quote on getting your tax return prepared? Does someone have something to hide? If the pressure is being put on you before you even step through their doors, my short answer is run. Of course, you should be able to get an estimate based on what you have to be processed. Yes, it can get complicated, but with the right questions, the cost of processing your tax return should really just take a couple of minutes. You should never have to take your return in to a tax preparer to have an estimate prepared. What's going to happen is that they're going to suggest discounting your tax return, and then the pressure's on to go that route because the firm generally gets paid more, and the person you're speaking to likely might get a commission. Finally, if you were to use this service, you should get cash or a check in our opinion. No other method should be acceptable. Your hands shouldn't be tied into using a Visa or MasterCard. You can't really use those to pay your rent. At our firm, there's no pressure. You get a check and you get everything that you're entitled to.
I was wondering, does someone need to make an appointment to have their taxes done?
This is hard to answer. Every firm has its own methods. But speaking about our firm only, we do have a drop and run service. All you have to do is use our after hours Dropbox. We'll call you to confirm your details to ensure nothing's changed on your file or add you if you're a new client, and we process it. Once the return is done, we'll call you with signature and payment instructions. Gone are the days where you would have to sit and wait while your taxes were getting done. Now you can go and get your hair done, buy your groceries, or even go on vacation. Being in the age of technology today makes it so much easier.
Okay, we're in a year of COVID-19. Hopefully by the time people listen to this episode, then it won't mean a thing anymore. But it has to be said, and everyone needs to hear the details on provincial and national benefits that they may have received. Are they taxable?
Short answer, Tammy, is absolutely yes. Any money received in 2020 or in later years, God forbid that this thing lasts beyond 2020, but any financial benefits that you or your business might receive in the year are indeed taxable. We've done all we can, and we will continue to notify clients right up to 2021 and maybe beyond if we have to about the looming tax burden. Don't get me wrong, the benefits help, but where you receive the money, it is taxable. Don't kid yourself and try to fool yourself into believing that it isn't. You can expect to receive a tax slip in early 2021 detailing the financial benefit that you received in 2020, for example, and that income must be claimed on that tax return. Keep in mind, none of this income had tax withheld when you received it in the year, so the taxes are going to be due in 2021. This will greatly reduce your tax refund or even make you owe. All we can say is to plan for it and be ready. Don't forget to spread the word that this is something that we're not all used to.
I'm missing a tax slip. Maybe it went to an old address or something. Do I have to wait to have my taxes done?
Not really, but you should wait to get all of your tax slips in first. T4s are not required to be mailed to employees or submitted to CRA until after the February 28th deadline. So, you may not have received all of your tax documents until at least maybe the middle of March. If you can't get a T4 slip or something similar to that, we may be able to access it on CRA's system, but that's only if the employer has uploaded it. Don't rely on your tax preparer to get all of your slips. It's not a great habit to be in.
Are there any sources of income that don't take enough tax out of you?
Well, there are a few that are quite well known. For example, if you receive money from your RRSPs or receive money from CPP, Canada Pension Plan, or the OAS, Old Age Security, often there's not enough tax being deducted and it will negatively impact your refund or increase your balance owing. When in doubt, call your tax preparer for advice. A good tax preparer will give you methods to improve your tax situation for the next year. If a tax preparer does your taxes and says nothing after you owe, then that's a sign you should be keeping a watch out for.
All right, here goes another question. If I live common law or am married, can or should I claim single?
If you're married, you must claim married. Hands down, period. If you live common law with someone and you've lived together for at least 1 year, you must claim common law, which for the tax purposes is the same as being married. However, if you live common law with someone and you have a biological child together, the 1 year grace period does not exist. It is from the moment you begin cohabitation. Either way, both people have their own tax returns processed. They're just coupled together by indicating that there is a connection between the two because of the family unit. There are pros and cons to this, but it's not an option, and you must file common law or married. There are no other options.
Is child support claimable?
Nothing is ever easy for a question. The key word is claimable. Claimable meaning, do I have to report it? Then the answer to that is yes. The alternative word is taxable. No, it is not taxable. By this, I mean to both parties, the party paying and the person receiving the funds. They both must report the money on their respective tax returns, but it is not taxable income, nor is it a credit to the other person who is making the payments.
Now that we know there's a difference between claimable and taxable, is spousal support claimable and taxable?
Spousal support payments are both claimable and taxable. The recipient must claim it as income, but the payer gets to claim it as a tax credit. However, in order to claim payments as credits, you cannot be in arrears for alimony payments or for child support payments.
If I had a business, do I claim it on my personal tax return?
If you have a sole proprietorship or a partnership, you are the business in every single way. So you would have to claim the income and expenses on your personal taxes. They are a separate schedule that would have to be attached to your personal return in order to make sure it gets claimed. If you have a corporation, you are the director of that business. The corporation is its own legal entity. So the business would file its own T2 corporate return, and the return gets filed based on a different timeline. Think of a corporation as a separate person from yourself. Then it's a separate identity from you as an individual person. So it files its own separate tax return. Whatever you do, don't ever file anything for your corporation along with your personal tax return.
I can get my taxes done pretty much anywhere. If everybody is trained, why should I be careful where I should go to have my taxes prepared?
That is very true, Mark. You can go anywhere. But the same could be said about everything. You should not be afraid to shop around. Get comfortable with a firm that prepares your tax returns. You need to ask yourself, do they have the services, attitude, and delivery that I'm looking for? You don't always get what you pay for. That's a myth. Paying more doesn't necessarily mean better service. Ask your friends. Usually this is something we suggest you to stay away from, but you aren't asking for advice on your tax strategies. But you're just asking where they get their taxes done. It's been our experience that sometimes the little shop that's closer than you think is a little hidden gem. When you go in or contact the office, make sure you feel welcomed. Here's a big one. Do they have seasonal or seasoned employees? Now, what's the difference, you may ask? Well, seasonal employee is defined as someone who's there only for income tax season and then they're gone. They might be back the next year or maybe not, and oftentimes they have a short course under their belt to help them learn how to prepare taxes. This usually means that they have very little experience. If they've been seasonal for 6 years, that's really only 1 year of experience for someone who prepares taxes all year long. This brings me into definition of a seasoned preparer. This is someone who makes their livelihood in dedicating their professional career to the preparation of tax returns, and this person has usually done thousands and thousands of returns. Now, they've seen it all and have adapted to changes every single year. Oh, you may think that you're paying less for a seasonal tax preparer and that's good enough? Nope. You're often paying the same no matter what. It's your money. Get the right person for the job.
That was a big point for sure. Most people don't realize the comparison and how important the differences are. So, selling a home is the next one. If you sell your home, do you have to claim the sale?
No matter if the home is your primary residence or not, it has to be claimed on your tax return. If the home was your primary residence, the tax preparer will need to know how long you've lived in the home and how many of those years you lived there yourself. If you've owned your home for 25 years and lived there for only 15 of those 25 years, you get an exemption of 15/25 of those years. The remaining 10 years will be claimed as capital gains. And finally, if it isn't your primary residence, then there's a capital gain once it's sold anyways because you've never lived there, so you don't get any exemptions.
All right, everyone. That was a lot of detail. I think we ran out of questions. Surely there is a lot more, but we want to cover all the most obvious and most common questions.
The Money Nest has been brought to you by A1 Bookkeeping Services, where they specialize in bookkeeping for small business, personal, and business tax returns, all at affordable rates. Do you need a bookkeeper or a tax preparer? Give A1 Bookkeeping Services a call. You'll be glad that you did. Check them out on Facebook or at a-1bookkeeping.com.
I think that was a fantastic episode. Lots of detail for sure.
I agree. I'm already looking forward to the next episode. Remember, to take back control of your money, allow your money to work for you. Don't work any harder than you have to for your money. Take care of yourself, and thanks for listening.
This is your podcast. We want to hear from you. What financial questions do you have? Are you starting a business and don't know where to turn? Are you having issues with your income tax refunds and you don't know how to fix the problem? Or maybe you have other questions or suggestions for upcoming episodes. We want to hear from you. Drop us a line. We'd love to hear your thoughts. We compile a list of your comments and suggestions, and we blend those into every episode when appropriate based on the topic. Don't forget to like, share, and subscribe to the Money Nest podcast.
You can find the Money Nest on your iTunes, Spotify, or your favorite podcast player. You can also go to our website at themoneynest.com, and we are now on YouTube. We're everywhere. This is Tammy, Suzanne, and Mark from The Nest. Thanks again for listening.
Bye for now.
You've been listening to The Money Nest with your hosts, Suzanne and Mark McKinney, brought to you by A1 Bookkeeping Services. We're your source to help you become financially successful while assisting you in building for your future. For more information, visit us at themoneynest.com or send an email to info@themoneynest.com. Don't forget to subscribe so you can be notified when our next episode is released.